And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Thank you for joining me, my podcast. I am Phil Grande. So, if you really take a look at what's going on in the market, they make it so complicated for the non-professional. It's unbelievable. First of all, there's only a couple of things you need to watch. And the most important thing is the banks and what they call yield curve. Now, yield curve, they make it so complicated, like you have to have a degree from MIT, Harvard, Yale, Williams College. It's so easy. It's just a measurement. It's like a stick. You can use a stick to measure. It's how easy it is. So what's going on in the market right now, yields are at a kill point. They call it the kill zone. So when you get the yields up to 4.35, and you get the yields up to, when they get up that high or 4.4, you got a real problem. And it's going, you're risking a correction or you're risking a crash. Now, the biggest problem is our debt. That's simple. Our government is spending too much money, and Congress won't do anything about it. The more we spend, the more we have to borrow. And we don't borrow anymore like we used to, 10 years, that sort of thing. We're borrowing, by the month, pay interest by the month. And we're paying, 5%. Going to even go higher, which is crazy. So the more that we keep spending, okay, and the less revenue we take in, then this whole thing starts where we start seeing these yields going up. And when you have what they call the yield curve at 55 basis points, that's a killer. Because we need the base 55 basis points to go up to 150 to do its job, to make the banks healthy, to start lending, to create a good environment. The banks are what's important. It's the heart and soul. The banks, not tech, the banks. And we need to get that before the banks feel good. They got to get that yield curve from where we're actually at 55 up to 150. And that's what the problem is. We're struggling with that. And until you get that fixed, the market, you're going to have, just a volatile market. So let me just explain how this all works. So financials, as we know, as a sector, okay, we need that 150 basis points. So until we get to that 150, the big banks and the regional banks, they can't make money. And the whole market, just really stays stuck because everybody's looking to the banks. Because we know if we get to 150, everything's going to be okay. The banks are going to loan. Everybody's going to be happy. Small businesses are going to be able to borrow money, borrow lines of credit. You need to get to that 150. So until the banks and the regional banks, I'm talking about the five big banks and the regional banks, until we get to that 150, things are not good. So the most important sector, as I said, is that, the banking sector, financials, and specifically the big banks, the five biggest banks. Now, again, the regionals, they can't make money until that curve steepens from 55. You got to get it up to that 150. And that 10-year Treasury needs to be around 55 or 5.25%. So the biggest problem is banks aren't making money right now. You got to get them to make money. And the number you want for the banks to make money, you got to get up to that 150. That means the 10-year Treasury needs to be around 5.25% for the curve to hit 150. Now, why is that important? Because when we hit 150, the institutional money will come back in. The institutional money, there's 12 institutions. They have between 16 and 18 trillion sitting there, and they'll put it back into the market, take it out of bonds and put it into market, and that cures everything. Then you have a nice steady market. Right now, every time the market goes up, it's on quicksand. It's like, it's quicksand. You don't know what's going to happen. So always think that 10-year Treasury needs to be around 5.25. We're today at 4.4, I believe. See what it is lately. 4.42. Okay, 4.42. So again, then we got to hit that number. Now, that's the level. When we hit that 150, instead of we're at 55, if we can get up to that 150, the banks finally make money. The regionals are suffocating right now. They can't make money. When the banks can't make money, we all suffocate. So when you get up to that 150 basis points, okay, loan margins start widening up. Now they're making money. Banks are heavy. They start loaning again. And the most important sector, the cyclicals, they're waking up. That's important because the cyclical sector is so important. And so anyway, like today, we're at 4.42. I think we're there, yeah, 4.42. And that curve is still stuck at 55. We got to get that up to that 5.25. So we're in no man's land. So don't listen to how great the economy is and it's Goldilocks and all this crap we hear every day. It's a bunch of BS. Until we get to that 150, we're screwed. The most important sector to hit that 150 basis points on your yield curve, as I say, is the financials. Specifically, the biggest banks, the 5 biggest banks. Because regionals, I mean, they can't make any money until that yield curve steepens. All this fancy talk, steepen yield curve. No, till we get to 150. Because the whole world opens when we get to 150, because now the big institutions will come in and push money in. They'll take $12 trillion, push it to, they'll push it through like 7 pipelines. And that goes to all the different stocks they want to buy. No, don't think about when they tell you on CNBC and Fox Business and all this that the stocks are going up on fundamentals. No, and they tell you story-wise it's going up. It's all BS. You got to get this money out through the 7 pipelines to get each stock they want to buy. So you got all these stocks out there. There's 7 pipelines that go to the stocks, and the big institutions decide which stocks they want to buy. And when they buy, they leave a footprint behind. We know what they're buying. And we know that every morning at 9:30, the first thing we do, Phil's gang, is the first thing we look at is price opening. Okay, so we look at the price open. Because if you open in the morning, you have a high and you have a low. Opens at the high, here's the low. It's got to stay at that high. If it can stay at that high, that's good news. You got to hold that high. So when it breaks that high, we're right back in trouble again. So that sector, the financials, is everything. And again, nobody even knows what it is. They really don't understand it. They don't understand how important cyclical stocks are. They have no idea. Okay, and remember, the only thing that turns green first, okay, when the curve finally moves to that 150, the first banks to move, what they call these custody banks, and like BK, Northern Trust, STT. So those banks are the first ones that will start turning green as soon as the yield curve hits 150, okay? So again, to get to that 150, we need the 10-year Treasury yield to hit 5.25. If we don't hit 5.25, then we're going to end up with a big crash at some point here, big correction. We can't keep playing this game, keep pushing the market up, all this game playing. Now, the yield curve is nothing more than a simple measuring stick. That's all it is. Okay? It tells you whether the economy is healthy or it's choking. If we're at 55, we're choking. At 150, hey, we're in good shape. When a yield curve is, again, it's just the difference between the short-term rates and the long-term rates. So if the 2-year, okay, short-term rate, and then you got the 10-year long-term rate. It's those two. It's that gap between that we have to watch. And that will tell you if, everybody, what's the market doing? What's the market? What do you mean the market? Look at the yield. We got to take a look at the 2-year. We got to look at the 10-year. Measure between them, that gap. That gap is what we have to measure. Right now, that gap is at 55 basis points. Way too low. Banks can't make money. So when they tell you this is the best economy we ever had in the world, that's just a bunch of nonsense. It isn't. Not when you got a yield curve at 55. We need to be at 150 so the banks will start lending money. So remember, the yield curve, the steeper it gets, 150 basis points, 200 basis points, okay, the more money the banks make. So now we have more loans going out there. People can go borrow. The economy starts to grow because the first money goes to all small businesses. You want the money to go to the small businesses. The economy starts to grow. The most important are the cyclicals. They start to grow. And then we have real jobs. Right now, the problem we're having is the jobs are terrible. The jobs are terrible. We have more jobs, okay, openings we ever had before. But we can't fill them. And when we fill them, the problem is, it's just like with COVID. If a job's $15, to fill the job now, companies are paying $25, not worth it. So companies have to pay too much money to bring a worker in. They're all low-paying service jobs. But people they're forced to pay them. They got to bring that money in. And then that causes a big problem. So the problem we're having right now is the banks can't make money. So the next time someone says, hey, economy's great, it's doing fantastic. No, it's not. Now when you got the regional banks suffocating, you got the big banks suffocating, and you got the big real estate is getting crushed, and the market's struggling, unless you notice. Remember, the 5 stocks that drove this whole market, the tech stocks, that are faster, they go up faster than the entire market. This has been going on for a long time, and they don't explain to anybody, hey, that's bad, that's not good. It's not good. So remember, the custody banks, watch BK, STT, and Northern Trust, NTRS. Not Northern Trust, just NRTS, sorry about that. Watch those banks. Those banks will turn green first because they will benefit from the yields going up, okay? They will benefit from the yields going up. So you'll know, hey, you know what, I'm going to start putting money back into the market because BK, STT, and NTRS all going up. They will go first. If you understand how the market works, that's good news. That means the banks will start making money. Energy loves these yields. It loves rising yields because it signals demand. So that's another thing you look at is your energy sector. Watch your energy sector. Watch XLE because now unfortunately our oil is going up in price because we got a bunch of dopes over there, in the sandbox, can't get along. Wouldn't it be nice if oil was up to $105 because our economy is going well? our banks are yields at 150 basis points. And if our yields at 150 basis points and the banks are making money and they're lending, especially the small businesses are expanding, wow, now you got something going. That makes sense. So, but our energy is up for the wrong reason. And then the next thing is the industrials, materials. It all falls right in when we get out of this 55. As long as we're in 55, we got a big chance of a correction. That's why you got to learn how to short. So I hope I haven't confused you. I hope this helps you a little bit. The banks need to do well, and they won't with these rates, these yields. See you on the chart, philsgang.com.